Fubo. So Fubo up a massive 13% on Friday. Do not be surprised at all if the stock is $3 to $4 this upcoming week. And why? What's going on here? Well, they got pretty much the best indirect news they could have possibly got. Okay, so Charter and Disney are fighting. Okay, so Charter, which is I think it's usually around the second biggest cable company out there, from my understanding. Basically, Disney took down their channels, ESPN specifically, and all those sorts of channels. And so this is the worst time this could have happened, right? With U.S. tennis championships going on, but ultimately college football started this weekend, okay? College football craziness. And so imagine you're one of these customers and all of a sudden, you're looking forward to watching all your college football teams that you'd like to watch and you can't watch them, right? You're going to be pissed. You're going to want to cancel your cable subscription and go somewhere else, right? Clearly. And this stuff happens all the time. And so this is a bad look. And keep in mind, NFL is about to kick off. NFL is about to kick off too. Now, college matters more because ESPN owns so many rights to so many different college games. So for college football fans, it's even a bigger deal. But it also matters for NFL fans as well because ESPN carries Monday Night Football. They also do a Sunday morning show that a lot of people love as well on ESPN. So, and never mind that, plus all the Disney channels in general, it's a bad look. Okay. Now, Fubo always gets a huge boost up in basically Google Trends data. This is Google Trends data. They always get a huge boost up when college football and NFL is about to start in general because it's known as the service that people sign up for if you're a sports fan, right? Especially with how convenient it is, how easy it is, the fact that you can cancel anytime. But we know with Fubo, most people sign up and end up keeping it long term because they love the service, right? And they also have a ability to watch 4 games on your big screen at once, which is something I always love to do, certainly on Saturdays, right? Because there's a bunch of college football games that you want to watch at the same time. And so you can put 4 of them, literally, you can put 2 of them on the screen at once, 3 of them, 4 games on one screen at once, which is magic because usually the only way you could do that is if you had 4 huge flat screen TVs. Instead, you can put it on just one, right? It's magical. And so Fubo's in this insanely sweet situation now. And by the way, YouTube TV's got to benefit from this as well. Believe me on that. So if you're a Google shareholder, this is also great news for you as well, okay? And so with Fubo, this is great short-term. Certainly, they're going to attract a ton of customers. Some of those customers will certainly stay with Fubo long-term. Some of them might cancel because maybe they're in some sort of contract with the cable company, but they're going to come back over time because Fubo kicks their ass, okay? Believe me, I've had Fubo for a while, and yeah, it's way better than cable. way, way better than cable. And so that's the situation that's happening there. This is the best thing that could have ever happened for Fubo. The longer this fight goes on for, the better it is for Fubo. The better it is for Fubo. And also, it's not a good look for Disney either. So Disney could be a little more, let's call it timid, when going back in for negotiations down the road, whether it be with a YouTube TV, Fubo, or others, because this is not going to be a good look for them either, because this hurts their business model as well. Okay, so both sides are hurt by this. It's like, a good saying of war, like no one wins. Both sides really lose in the end, right? You think you won, but you really lost. So, but nonetheless, the only winners in this, YouTube TV and Fubo. Massive winners from this. Now, in regards to Fubo, the main other thing that, in terms of this stock getting out of the gulag, going $5 plus, and then, hopefully reaching double digits, going 10 and above, and getting on that track, we got to continue to see profitability come through. The user numbers are great. They're going to probably be shockingly great for the next several quarters, but we need to see profitability come through. And so that's what we're waiting on in regards to Fubo. Once that happens, then we can talk about this becoming a real deal Holyfield stock and having a lot of fun in this one over time. So it's a process. This is a potential hedge for me. This is in case the market gets bad, save myself on the other side and be able to flip puts into profits and put that money into long positions. And that one is Toll Brothers. So looking to potentially buy some put options that would expire either at the end of 2024 or beginning of 2025. Toll Brothers has been an incredible stock the past 5 years. The company's put up tremendous numbers, and their margins have been great. Profitability has been great. Revenues have been great. The backlog's been great. It has started to, their backlog has started to fall recently. But, the numbers have been pretty extraordinary for Toll Brothers for years now at this point in time, okay? But, with that being said, they're in a bit of a pickle, and this pickle could unwind in 2024, and that's not going to bode well for a stock that's at literally all-time highs in the history of the stock, okay? So, there's a lot of bad situations that can happen for Toll Brothers. One is rates go down. Now you may say, well, that would be good for a home builder like Toll Brothers, rates go down. You could say that, but the problem is the main thing that's been benefiting Toll Brothers and all these home builders is the fact that inventory is on the floor right now. Inventory is about the lowest you've pretty much seen in many markets, certainly in decades, if not ever. It's incredible because most people are locked in at 2 and 3% mortgages, if not 4% mortgages, right? And with mortgages of 7% plus right now, they're just not even considering moving. So like, I don't want to list my house right now because, I don't want to move on my mortgage right now and then go from a 3% mortgage and buy something and then have a 7.5% mortgage or a 7.2% mortgage. People just don't want to do that. So if rates go down, inventory will loosen up, which would be bad for the home builders. If rates go up, then affordability goes down even more. Now, these home builders have been able to take this hit so far. I don't know how much more they can take the hit. Let's just put it that way. Everybody has their limits, okay? Now, there's another scenario where the economy gets bad, job losses start coming in 2024. If that happens, obviously home sales are going to go down. You can look back at past times. That's just what happens, right? And then lastly, the stock market's been tremendous in 2023. And that's great for Toll Brothers numbers currently because at the end of the day, Toll Brothers customers specifically pay very close attention to the stock market. These are higher net worth individuals. Toll Brothers' average home is somewhere around, let's say, $1 million or so they sell. So if the stock market goes down in any substantial way in 2024, for whatever reason, Toll Brothers customers will pull back. That's something we saw in 2022 when actually rates were even much lower than they are now. Toll Brothers customers started to pull back in a major, major way. Listen to the Toll Brothers conference calls in the third quarter and fourth quarter last year, in the fall quarter, in the summer quarter. It was depressing. And the reason being is a lot of Toll Brothers customers saw the stock market just going down and down and down. Their portfolios start to go down and they start saying, do I really want to go buy $1 million house right now, $2 million house? I think I'll wait on this right now. But with this year obviously being a great year for the stock market, obviously a lot of people's portfolios are feeling a lot better and they're feeling more confident. And remember, going to buy a new home, especially in the $1 million bracket or above, it's a confidence play. That's what it is. It's a confidence play. And so with the stock market blasting higher, it's great for Toll Brothers. But if you do have, for whatever reason, a reverse of that, it's going to be very bad for Toll. That's why I look at it as a perfect hedge, because Toll stock always falls when the stock market falls in any substantial way. But on top of that, their customers pull back in a substantial way. That's why I look at it as just a amazing hedge for 2024, just in case the stuff goes bad. If it doesn't, that's perfectly fine, because that means my long positions will be printing money in regards to this one. And do keep in mind, Toll Brothers is a stock that's topped way before the economy was into recession in the past. If you look back prior to the great financial crisis, Toll Brothers stock topped in the summer of 2005. No one even got really concerned about the economy till 2007, but it was really 2008, and that's when everybody started to freak out. So just keep that in mind. Even if you feel like the economy is going to be fine for, let's say, the next 3 years, there's a high probability, or possibility, I should call it that, a possibility that Toll Brothers stock could top literally this year in 23. We'll see, okay? I just look at it as a very attractive hedge, and I hope it loses all its money if I, am going to do any hedges, because that will mean likely my long positions did very well.